What would you do if a $220 million deal fell apart the night before signing and the other side stopped returning your calls? Well, today's guest, he didn't panic. He got in his car and you will not believe what happened next.
I don't need a deal to get done. I just need to know as much as I can get the feedback or the why, because that can help me for the next deal, or maybe there's a misalignment because these things are complicated. Maybe there is a misalignment that I can solve for.
The guest I'm talking about is Alex Jekowsky. He's a serial entrepreneur and founder of CENTS, a laundromat tech company and a deal maker who has transacted over $220 million in mergers and acquisitions and capital raises.
And so I think it's so much of all of this is like every deal is, and I can't speak to this as a man, so I know that, but it's childbirth is the only thing I can really imagine. Every deal is that painful and extraordinary and hopefully beautiful at the end. Challenging, but you got to love the pain.
In this episode, we get into why being radically transparent in a negotiation is often your biggest competitive edge, how to make the other side feel like they won even when you're getting what you want, the difference between showing and selling and why the best deals close themselves, and what founders get dead wrong when they think about who's actually going to buy their company. If you're ready to start making deals that stick and building the kind of reputation that brings great deals to you, this episode is exactly what you're looking for. Let's jump in. So this episode is brought to you by Granola, Quince, HomeServe, and by Shopify. If meetings are eating up your day, Granola is a no-brainer. Get 3 months for free at granola.ai/Kwame. By Quince, refresh your every day with luxury you'll actually use. Head to quince.com/Kwame for free shipping and 365-day returns. Now available in Canada too. By HomeServe, help protect your home systems and your wallet against covered repairs. Plans start at just $4.99 a month. Sign up today at homeserve.com. Not available everywhere. Most plans range between $4.99 and $11.99 per month for your first year. Terms apply on covered repairs. And by Shopify. Sign up for your $1 per month trial at shopify.com/Kwame. That's shopify.com/Kwame. Oh, Alex. You know I love you, or you're a humble man, but let me ask you this. When it comes to deal making, if there was a metric for success, if we were to just pull a random number out of the sky, hypothetically speaking, of course, how much have you been able to negotiate as an entrepreneur? Because I don't know, I read some news recently that had some numbers that I found really interesting.
Yeah, I mean, if we add all the, M&A that we've done and all the things I've done probably in my career, we have maybe a slightly higher number than I'll give you, but at least the number that we have publicly announced, around 220 million transacted so far, in this business. And obviously, again, doesn't include the 3 companies we bought and the last company I sold and all of that. So it's been a busy last 5 years or so.
I would say so. And so I really wanted to start this off with a bang because, ladies and gentlemen in the audience, we have a real deal maker here in front of us. And this is what's exciting, because the thing is, the way that you approach this, it's real, it's battle tested. You've done it in different ways. You've sold, you've exited, you've acquired. And so very few people get the opportunity to do both and see both sides of it, which I think leads to your brilliance. So this isn't going to be theoretical. This is going to be like a tactical masterclass. And so I'd be interested to see from your perspective, just how do you view deal making and negotiating in general? What's your philosophy or approach?
Yeah, I mean, I think the first thing is, if you've transacted a ton of volume, but the deals were bad, then who really cares? You overspent or you're underpaid, one way or another. And so it's always a balancing act, particularly as a founder. Like it's so, you get the ego boost of seeing that, the big numbers and how excited everybody is for you and all that. I think the thing that we're most proud of is just like, in some ways the efficiency on the capital, or when we've done transactions, the synergies that transaction's been able to actually facilitate for us. I think when we're raising capital, it's how much revenue are we going to and cash flow can we deliver because of the capital raise. If we bought a business, we bought it because we thought we could do something really special with it and get a really quick payback period while also, you want the person you're buying the business from to feel like they hit a home run personally, but also, realize that there's a strategy behind buying anything. And I think I tell founders all the time, okay, you want to build $1 billion company. Well, why the hell is somebody going to buy you for $1 billion? What are they going to do after they bought you? Because they're doing it for a reason. They're assuming if they buy you for $1 billion, they at least are going to get 3, 4 plus billion out of it. If they're going to buy you for, $1 million, they got to think that they're going to be able to extract value either through cash flow or by putting you into something bigger where they can extract more value. So I think the thing that's been helpful for us is we've been able to clearly, I think showcase to folks, well, to be said, 1,000 people have said no along the way, but we've been, to the right people, been able to clearly identify the reason, kind of the why behind any deal and where we wanted it to take us. And so, I look at, deals, whether it's M&A or financing, is accelerating a mission or vision that you have set. The capital or the deal is not changing that. It's just accelerating your ability, pulling the out years in, as I like to say, or just accelerating that growth and then de-risking your execution along the way. You could probably do it without the capital, but it'd be maybe more risky or a hell of a lot harder. And so those are the two things that need to initially make sense for me if we're looking at buying a company or raising capital. Is it going to accelerate a pre-existing plan, or is it going to be distracting? And is it going to de-risk our execution or add more risk, as most M&A kind of transactions have the propensity to do, and even financing and raising a ton of capital? The best way to distract yourself is have more money. And so, that's kind of at least the two things that we really look at in how we evaluate, like, should we really do anything? And is this the right deal to do?
Brilliant. I agree 100%. And I think this is something that people don't talk about enough because people can be distracted by these vanity metrics. So they talk about how much they raise or anything. Was it a good deal? Are you making good deals? And something that you said that I want to highlight here too is that even though you are doing these transactions at a very high level, these are very big numbers, you still care about not just making it a win for you and your team, but you said, I want to make sure that they feel like they're hitting a home run. Let's, like, the person on the other side of the deal. And I think that could be surprising for some people too. So can you get into how important that is, even in these situations where we are transacting at a very high level?
Yeah. And again, my perspective is the only thing better than making money yourself is making somebody else money, right? That's just like the general feeling. It's pretty remarkable when you can do that and provide that kind of liquidity. I'd say that, from a negotiating standpoint and how I view it, I want to work with people I enjoy working with. If I don't enjoy working with them, if there's not a good culture fit, then there's no amount of money that could work past that will add risk, and it will actually slow down our ability to execute. And so when you get to sit across the table that somebody could be remarkably different than you, but you have, like, some aligned value or some kind of connection, then it's okay. Well, I want you to be successful. Now, I might want me to be more successful or just as successful, but I also need you to be successful, because the times, especially, again, it's like buying a stock and saying you made so much money because you held it. Well, you haven't made the money until you sold it. And so, there's a couple of stocks that I thought I was a genius, but I never sold them. And it turns out I was a dumbass. And so you're not. So for any deal, it sounds great on paper, but how does the next 3 years go in an earnout structure or something? And when you're, we create earnouts in a lot of our in acquisitions we've done, I think, in when I've experienced, which kind of keeps people going and wanting to perform. If you're creating an earnout structure that's not able to achieve, sure, maybe you save some money or stock or something, whatever you're adding to consideration, but like, you don't want to create a scenario where when you do a deal, you're making something hard for the person that is thinking about the money that they can make. That's impossible to achieve. That's where, like, earnouts and deals get litigated. That's where you have people bailing in the middle of integrations. That's where you have a lot of culture issues. Now, you want to set something that's going to drive motivation and all that when it comes to an earnout, but that's just an example of, to an investor, I don't want to feel like I have to sell them to invest. Obviously, in the early days, when you got no product, you got no nothing, people got to make a bet, but they're largely making a bet on you and your caliber, less whatever you're telling them and pitching them, because that might pivot and change. They're betting on you as a person. In most of the financing rounds that we've done, we've tried to do the least amount of selling and most amount of showing, and basically do their math. Say, I know what you want to get to. Here's how we get to it. And you either believe in our story and believe in the market and believe in our product and all that, and that people are going to or not going to. But I think if we, from an investor standpoint, if you can negotiate for them and feel like you aren't selling them, then you know that they have the ability to make money and you can feel confident about that. And when you're buying a company, and or selling, but if you're, I guess on either side, if you're selling a company, the company that's buying it, you want to have a good reputation that you're selling something
Mm.
good. Otherwise, good luck doing it again. And if you're buying something, you want to make sure you deliver a good experience to the seller because that's your reputation as well. And you don't want to deal with somebody who's upset and coming along for the ride. And it's just like a messy situation that is, I think, really avoidable.
I agree 100%. And I think that distinction between selling versus showing is something that's not fully appreciated too, because a lot of times if you're in a position where you have to sell hard, it's often, or I should say, it can be a situation where the numbers don't match. There's some misalignment, and you're trying to force a deal through that never should be done, and that is never a situation you want to find yourself in.
Yeah, it's a bad analogy, but it was my dad always told me. It's like there's a reason that you don't see Ferrari commercials, because you don't need to sell that. You like it or you're going to get a Lamborghini, you're going to get something else, but there's a reason why you don't see it because it kind of sells itself to a certain extent. Now, we can't all operate under that. We don't all have Ferraris at the time that we're trying to sell a Ferrari, and maybe it's a Toyota that we're telling you will be a Ferrari if you buy it now or something. But I think that's true, and it makes life easier. It's that I feel less stressed when you can be authentic and just explain what's going on. When you're constantly
Mm.
selling, it's like you're doing two jobs in that process. Now, I'm not saying you don't have to sell, and there are many times I've had to do it, but the more you can do it in the framework of like, this is the reality that we're living in. Here's the warts and all of what you're looking at as a business. If somebody gets excited about that, then you have a partner for life because they're not, you know, if they're being sold something, any one wrong thing goes and things can get really, really fragile. So just it's maybe a kind of a luxury to have that perspective, but I do think it's an important one.
100%. And the one of the things that I'm hearing a lot, you mentioned authenticity just now, but it sounds like you are pretty transparent with the way that you negotiate. And again, that's something that people are very scared of sometimes. So sometimes people mistake negotiation for poker, where they're saying, "Okay, I can't let you see my cards; keep it all close to my chest," you know. But it sounds like you're a bit more open. Can you tell us about that philosophy? Because I think that's surprising to some people too.
Yeah, and I'll preface it by saying I'm not great at math, so this is, but or remarkable at numbers. But I'd say, from a business standpoint, everything is just math and numbers, and most people are, we might not say it, but they're looking to achieve a very similar goal. You talk to investor A and investor B, and it's a private equity firm or venture firm. Like venture firms have a similar profile in terms of rate of return that they're looking for. A private equity firm has a generally similar profile in terms of rate of return that they're looking for. When they raise capital from their LPs and from their investors, they're saying, invest with me because I'll get you a 15% or a 30% IRR in the fund. And that means our companies have to perform X and we have to deliver Y. Like it's general. Let's say in private equity, they're looking for a 3 to 5X. Maybe they settle with a 2, but but 3 to 5X is the target over X amount of time. So when you know that that's generally how a private equity fund works, then you can back into what they're underwriting on their own. So when you send financials to a private equity firm or to a venture capital firm or to somebody who's looking to buy your laundry business or somebody else, they're going to take your numbers and put it into their model. And they're trying to explore their exit scenario in a downside, in a base case, and let's say this all goes really, really well. So when you know all that's going to happen, it's not, you're not sitting there being, man, I hope they like the number I gave them. It's like, if they're going to like it or not, if they believe in the market and the product that you're building. And not everybody will believe in it. So they might not get there. But in our model, I have a share price calculator and evaluation kind of analysis for every month from 2023 to 2031. We know at any given point what the value of our business would be based on market multiples of companies very similar to us on kind of some of its parts, our software, our payments, our hardware, blend that all together on these market multiples. And here's your valuation. And now maybe are you paying forward 6 times and forward 6 months, forward 9 months, forward 12 months? Like that maybe is where you're kind of nickel and diming at the very end. But at the end of the day, it's pretty transparent. So if I'm raising at X price today, and I know you are looking at a minimum in a downside scenario to be able to 3X, is what I'm presenting you from a financial profile going to live up to that? And if not, I have to lower my price. If I feel like, oh my God, like 3X with the numbers I'm giving them, like, of course, then maybe you can raise at a higher price and be very authentic in that approach. And that removes the who's trying to screw over who or who's underpaying what. And then you can actually get a nice feeding frenzy in a deal and choose your partner. And we ended up choosing a partner that gave us actually a slightly lower valuation than another one, but we just enjoyed them the most. And
Mm.
that is the best case scenario. You have a fair deal priced correctly with a great firm who you believe in the long-term partnership with, and you're getting an appropriate value that is going to actually accelerate your growth and de-risk your execution.
Ooh, okay. Now I'm going to put you on the spot here, Alex. Um, when you think back on your career with the negotiations you've done, what would you say is your favorite negotiation story? Of course, while being respectful to confidentiality.
I would say my favorite one would be probably a acquisition that we did. Really excited about. Spent a lot of time working on it. We had handshake deal via email. Felt really good, and then the night before the LOI was going to be signed, we got an email saying, "Sorry, we're out. We just decided we're not doing this, and our business is great. We don't need to do anything."
You know what's ironic? As a negotiation expert, one of the most important skills I teach is presence, truly listening, reading the room, catching what is not being said. But for the longest time, I'd walk out of my own meetings realizing that I spent half of the time buried in my notes instead of actually being present. Things would fall through the cracks, action items would get fuzzy, and I'd have to piece everything together after the fact. But that changes with Granola. Granola is an AI powered notepad built for the way that real people actually meet. Here's how it works. You take notes like you normally would, and in the background, Granola securely transcribes the meeting. And when it's over, it turns everything into clean, structured, and actually useful notes. And the best part? Granola works through your device's audio, which means it integrates seamlessly into the tools that you already use. No setup, no awkward interruptions. It is just your normal meeting with superpowers. You get to actually listen, stay fully engaged, and still walk away knowing exactly what was decided, who's doing what, and what comes next. Before Granola, our team would spend extra time cleaning up notes and double checking details. Now we leave meetings aligned and clear. It saved us time and helped us to operate at a much higher level. If your meetings are eating up your day, Granola is a no-brainer. You can try it totally free for 3 months. Just go to granola.ai/Kwame. That's granola.ai/Kwame. Get 3 months free at granola.ai/Kwame. Here's something that I've learned over the years. How you show up matters every single day. And I'll be honest, I used to overthink getting dressed, trying to look put together without spending a fortune on it. And then I found Quince, and it genuinely simplified everything. So I bought their stretch knit pin tuck trousers, and they have been in constant rotation. I'm talking about meetings with the team, running around the town with the kids, hanging out with friends. I just throw these on and I know I look good. The fabric feels elevated, lightweight, and breathable, but they're so comfortable. I honestly feel like I'm wearing loungewear. And that's the thing. They look polished and they feel that relaxed at the same time. One pair and every kind of day. And the price? It is not at all what I expected for that kind of quality. And here's why that is. Quince works directly with ethical factories and cuts out the middlemen, so you're getting premium materials at 50 to 80% less than what you'd pay for similar brands. For spring, think 100% European linen shorts and shirts starting at just $34, and 100% Pima cotton tees with a softness that honestly just has to be felt. And their pants hit the same sweet spot too. Relaxed and comfortable, but polished enough to wear pretty much everywhere. Refresh your everyday with luxury you can actually use. Head to quince.com/Kwame for free shipping on your order and 365-day returns. That's QUINCE.com/Kwame for free shipping and 365-day returns. Quince.com/Kwame. Now available in Canada too.
And I was kind of shattered because I saw this unbelievable opportunity that something could be really great. And I emailed us like, hey, can we talk about this? Can I come up and see you guys? I'll get my car, I'll do anything. Like, let me know what he could do. And they're like, sorry, we made our decision. Super respect you. Just this is what we're gonna do. I said, okay, understand. You know, got out there anyway the next morning, 8 a.m., and just waited at a coffee shop, met one of their partners. We renegotiated the entire deal on the back of a receipt at the restaurant we were at. And then we met with the leadership of that company later on in the evening, and then got the deal back kind of on track. But I remember this email of like, sorry, we're out and we don't want to talk to you, and we'll reach out when we're ready. And then just saying, F it, get out there anyway, and then renegotiate the entire thing. I still have this receipt at my house of just like this entire deal we redid that was really transformative for us. And so I think it's so much of all of this is like every deal is, and I can't speak to this as a man, so I know that, but it's childbirth. Is the only thing I can really imagine. Every deal is that painful and extraordinary and hopefully beautiful at the end. Yeah, boy, challenging, but you got to love the pain to
Yeah.
keep doing it.
Yeah, this is fascinating because I love the story. There's a lot to it because we have the asynchronous nature where it's like, okay, we just wanted to kind of do a drive-by heartbreak. See ya, we're out via email and avoid interaction. But you recognize, hey, this is so serious that an in-person conversation is necessary. And I think that's a very important lesson because the more serious the situation, the more emotionality, the more complexity, the more personal the mode of communication needs to be. And you took the risk, got on the plane or got in the car, got there to be there in person. It's like, okay, listen, you're going to have to say this to my face.
Yeah,
But
and I think, but the approach was like, listen, I'm in your corner no matter what. We've been talking for however many months, and the approach for me wasn't like say that crap to my face. It was a little bit
Mhm,
more of like, I want to understand because to be a good partner to you or to anybody else you want to do business with, like I want the feedback. What did I miss in this process? Like give me that post-mortem, because my intention here was actually to like deliver something to you that can change your life and can be really powerful, and this amazing partnership we can have. I might not have delivered what I meant to deliver in the way. Maybe I did, and you're still out, but like, can you give me some feedback? And I'll knock on any door for feedback, until you give it to me. I don't need a
mhm.
deal to get done. I just need to know as much as I can get the feedback or the why, because that can help me for the next deal, or can maybe maybe there's a misalignment because these things are complicated. Maybe there is a misalignment that I can solve for. And it turns out that it wasn't that there was a not a desire to do a deal. It's just structurally they, were feeling positioned to go one way that they didn't want to go in. And instead of trying to continue to negotiate, because deal fatigue is really freaking real. You'd just rather say, screw it, I'm just not doing this. And maybe we'll pick it up in
Mm.
the future. And so, it's a balance. Time kills all deals, and deal fatigue is there, but you also want to like nurture and not rush and not put pressure, but you also want like immediate feedback to ensure that you're aligned. It is so much art in that process. But for me, it was not, say it right here. And it was much more of like, hey, help me understand, because like I'm your friend at the end of the day through this process, and I want what's best for you. And if this deal's not it, then let's not do it,
Yeah.
kind of thing.
No, that's beautiful. And if you and again, if it violates confidentiality, don't say it. What was like the sticking point that made them back out?
I think that, look, in any deal, and I know this when I was selling a company, I've talked to other friends, or when you're raising capital too. It's these things are big decisions. I think structure matters a lot. Not just in your, it's structure and pressure, right? If you've been running a business that you haven't, let's build the connection to maybe a laundromat or a dry cleaner, which is obviously the business that I'm in a lot. If somebody wants to buy, you've got a bunch of stores and it's a great business, but you've been running it just the way you've been running it, uh, without external pressure. Like you have a down month, yeah, you have a down month. It's such as life. Well, if a private equity firm were to buy you, or a company were to buy you, or your friend wants to buy your business, doesn't matter what it is, and says, hey, I'm buying your business for X dollars, but you need to hit these milestones to succeed, right? And it's the same thing of raising capital from external investors. You now have to do something that you weren't doing before, which is answer to somebody and like hit something that you've never had a goal, maybe one you set yourself, but Okay, maybe you get angry at yourself for missing it. There wasn't a repercussion necessarily on hitting some big milestone. But in deals, whether it's at the board level on setting a budget for the year, or you buy a company and there's an earnout or milestones, it changes the way that you think about operating day to day. And so why I've kind of struggled working with bankers personally is like, depending on the industry, particularly with small business owners, like putting any deal and frankly any company into just the box of how things are supposed to work, I think in many cases leads to discomfort or misalignment. And we had a ton of times when we were struggling at raising capital. It's because we did not look like every other vertical software company. It's just like didn't. And our industry didn't look like it either. So people couldn't get over the fact that our business was so different that they were just like, it's not for me. Even if the fundamentals are great and all this, it's just not for me. It doesn't fit into the box of what I consider great software. So I'm not going to do it. And if there's a framework of a deal that you always do that works for you and is generally accepted, and somebody doesn't want to do that framework, then you either decide, not a good deal for me. They don't work with my framework. Or I have to actually get deeper, understand why that didn't work, create something that could do that could be better. And holy crap, it's the best thing I've ever done. And I think we've had that experience from an investor standpoint, people that had no business betting on us. But they believed it, they got deep enough to understand it and ask enough questions. And it's the same thing in the deals that we've done on buying companies or whatever it is. It's like we get deep enough to understand to be able to be flexible and see a different way of doing it. And you still got to make a bet, but it's turned out to work.
I'd say so.
Yeah.
I would say so. And this brings us to a really important point though, because you can have the numbers, you can have the financials, everything in place, you can have good business fundamentals, but people still might not go for you because you are different and your company was very different. And the thing is, there's also a stigma with the laundromat business that you had to overcome. So let's talk about that, because that goes beyond the financials and just basic negotiation strategy. There was a lot that you had to overcome. So I think a good place to start with is just making sure that the folks in the audience are oriented to understand your industry, because it is pretty unique and novel. Most people don't understand it. And then what were the hurdles and how did you get over it?
Yeah, it's we're right. So Sense at a high level is, business management, payments, hardware, everything that helps a garment care and repair business owner run their operation. So think of the local laundromat, how a customer walks into a laundromat, how they pay for wash and fold, how they start a machine for self-serve, how they order, pick up, delivery, laundry. Like we power all that kind of infrastructure. So it's point of sale, all the online ordering, websites, marketing tools, AI, all that fun stuff. And when we started, look, the laundromat industry is still 60 to 70% coin, right? And that's a lot of people think, oh, that's because it's a cash business and people love to launder money in it. It's like, no, it's a very expensive endeavor to add credit and debit card readers on each machine, because this industry, you can't just go to Square or some random company and put a reader on a machine. And before we entered, there were like 3 companies, maybe 4. Maybe I'm getting that number wrong, but 3 to 4 companies that made these devices, and you might be spending $60,000 to retrofit your store. So it's not the easiest thing to just turn around and do, when a retail and normal coffee shop could just have 2 card readers that are $200 each. And that's it, and
Right.
so there, because of a lack of technology, the industry has had to behave in the way that it has. And so when you look at restaurants and home services and HVAC repair and all that, there has been hundreds of millions, billions of dollars of technological investment to elevate the quality of life for those business owners from a technology standpoint. Laundry hasn't had that. We're the only venture-backed company in the industry. We're the only one that's raised outside capital. Our Series C of 140 million is the single largest investment in a technology company in the history of the world of laundry. Never happened before. And so, I think that these industries are overlooked in many ways from an investor standpoint, because it's too small. It's too niche. And I always tell, founders, just show me a company that built a business that owns 100% of its industry or has reached its ceiling in a vertical. Now, now there's only so much you can really own, and there's, there are arguments to be made on how you can look at your TAM and things like that. But all to be said, laundry is a great business, an essential service, a staple of a community, and it had just never, to me, one of the last Main Street dominoes to fall in terms of technology focus for that space. And so that's where, I got in the industry because I wanted to buy laundromats when I sold my last company. I heard they were great businesses. And then fast forward 5 years, we power one in nearly 6 stores in the country. And so I'd say that the industry is starting now to not be seen as just like the unsophisticated, grungy immigrant mom and pop owner, which, by the way, you have a lot of immigrant mom and pops, because this is the perfect, most beautiful example of the American dream. You need no skill, no trade skill. You don't know how to style hair. You don't know how to be a nail tech. You don't know how to cook. No problem. Open a laundromat. Put some machines in there, slap a red coin laundry logo. You're good. Like that's the beauty of the American dream and our economy, is that you can invest in a business and just work hard and build something great. And that's what a laundromat is, and a dry cleaner for many folks. And so we're having more sophisticated people get into the space. I'd like to think that the work that we're doing and other technology companies pushing things further is enabling new investors and more sophisticated folks to start to really see the opportunity, not just on Main Street, but with garment care and repair in particular.
Brilliant. Brilliant. Yeah, and it makes a lot of sense too, because you can understand where the bias or concern was coming from the investors, and you have been able to retell this story in a compelling way that is also based in truth, which I think is really important. And in those conversations where you recognize that there might have been some friction, was it that you would kind of take preemptive strikes and assume it was because they didn't understand the business, or they were hesitant about the business, or would you ask and then respond with precision?
I know early days, I had advice from one of my investors that said, listen, if somebody doesn't get it, just move on. Because like, if they don't get it, they don't get it. And if it's such a fragile deal, then it probably wasn't meant to be to begin with. And there's always a balancing act, because I want them to get it and I want everybody to say yes. And so you want to convince, but I'd say that throughout my life, personally and professionally, like, people can smell the bullshit. They can spot you being a salesperson. And the
Yeah.
more I have to sell, my passion should be the only selling point. People should know that, like, I freaking love this thing because of the energy I have talking about it unknowingly. But when I actually have to, like, really try to do the used car salesman to get you to believe in the industry, like, one, even if you said yes, you are such a skeptic in the beginning. Is that the kind of partner that's going to be the most accretive for us going forward? Is that the best kind of deal we could get? Or is it just like, keep pounding the pavement, keep working, and find somebody that gets it? And the people that have invested in it, particularly in the later rounds, the people that spent the most time with us are the ones that we actually selected to invest, and to be the partners. And it wasn't a thought while we were going into it. It's kind of in hindsight, I'm looking at it. It's because they were interested to spend the time to understand it.
And a big thanks to HomeServe for sponsoring this episode. We talk a lot on the show about being prepared, having the right strategy before you walk into a difficult conversation. But I'll tell you, nothing humbles you faster than being completely unprepared for a home repair. I remember when my water heater just gave out. No warning, no negotiation, just gone. And suddenly you're scrambling, searching for a reliable contractor at the worst possible time, watching costs stack up in real time. That is a stressful place to be. But here's what I wish I'd known. Your regular homeowner's insurance likely doesn't cover that. Plumbing failures, HVAC breakdowns, electrical issues, you're often completely on your own for those. And that's exactly where HomeServe comes in. HomeServe offers plans that cover specific home systems, starting at just $4.99 per month. When something goes wrong on your plan, you simply call their 24/7 hotline and they connect you with a local, experienced professional that can handle the repair. No panic, no frantic searching, just one call. They've been helping homeowners for over 20 years with a network of over 2,600 local contractors, 4.5 million customers, and a 4.8 out of 5 post-repair rating. Help protect your home and your wallet with HomeServe against covered repairs. Plans start at just $4.99 per month. Sign up today at homeserve.com to find the plan that is right for you. That is homeserve.com. Not available everywhere. Most plans range between $4.99 to $11.99 a month for your first year. Terms apply on covered repairs. Imagine your customer. It's late. They're scrolling, and then they find exactly what they've been looking for: your product. They add it to the cart. They hit checkout, and then they realize that their wallet is nowhere near them. Passwords? Forgotten. Card number? Not a chance. That's the moment most businesses lose the sale, but not yours, because your store has that purple button. One tap, done. That's Shop Pay, powered by Shopify, and it's why Shopify has the best converting checkout on the planet. Fewer abandoned carts, more completed sales. But Shopify isn't just great for buyers, it's a powerhouse for business owners too. With hundreds of ready-to-use templates, you can build a beautiful online shop that matches your brand. Shopify is also packed with AI tools that write product descriptions, polish page headlines, and even enhance your product photography. And with world-class expertise in inventory, shipping, and returns, Shopify is truly your commerce expert. See less carts go abandoned and more sales go with Shopify and their Shop Pay button. Sign up for your $1 per month trial at shopify.com/Kwame. Go to shopify.com/Kwame. That's shopify.com/Kwame.
And it's not just trying to say, oh yeah, I get it. Okay, you presented it. Okay, I'll do my Google search and Claude, ChatGPT, and hire some market mapping firm and give me an answer. It's like they wanted to sit with our customers. They wanted to sit with us. They wanted to understand, why were we excited? Tell us more about the industry. Let's get our hands and roll up our sleeves. Those are the people we want to do a deal with.
Mm-hmm.
And so, again, like, these are a lot of luxuries of choice, but I think that, the painful part about starting or building or selling a business is you have to endure pain and be patient to find the right buyer or seller, because otherwise, even if you can get a deal done, the long tail negativity of somebody who didn't really believe in it in the first place, who questions you every second, who never understood it and can't be helpful, or has set up a deal structure that's meant to be punitive, whatever it might be, it adds a lot more pain at the kind of long term.
I agree. You're spot on, and I think that feeling of fit is something that is just underappreciated, because again, you get that people can get that deal making bias where they're saying, "No, I want this so bad, even if it's not right for me. I want it so bad." And then I know that when I was younger in my career, sometimes it was an ego thing where I'm saying, "I know I'm good enough to figure out a way to get this deal done." But sometimes resistance can be overcome and should be, but in other times we have to recognize that the resistance is a signal that you might be on the wrong track, and we don't appreciate that enough.
Yeah. Before the last company that we bought, we were looking at a different business, and I was so obsessed with trying to get that deal done, and it fell through, and I was devastated, and I was like, screw it. The deal structure makes no sense. What they're asking for is so insane, but maybe we do it anyway, because we need to get this done. And it never ended up obviously getting there. And like, thank God that is the case. But I think that is definitely a real existential crisis. I remember when we were looking at buying this business and it fell through, I called one of my advisors. I'm like, I don't know what to do. Like, this was our ace in the hole. This was like a huge part of our strategy for this particular kind of segment of our business. And he's like, well, did you call somebody else? Did you call this guy? Did you call another company? I was like, well, I was looking at all of them before I started going down this road. He's like, yeah, but if you called them and seen what's up? I was like, no. I picked up the phone, called another company. That's a company that we ended up, doing a deal with 16 months later. One of the best decisions we made. So, I don't want to say the classic one door closes and one door opens, but you kind of like one door closes and you got to punch a hole in a wall and then open it up because you didn't even see a door there, kind of thing. But I have been there as well. And I totally agree with you. You got to be patient and continue to push when something's fishy or doesn't feel right in your gut.
100%. 100%. And you're at the point now, you've been at this point where your reputation is doing a lot of the work for you. And I know one of the things that we talked about was how challenging it has been to get recognition for accomplishments. And this is one of the things that I've seen so many times with entrepreneurs where they're not getting the opportunities that they want, they're not getting the recognition that they want because they are either unwilling or unable to tell their story well. And so for you, I want the audience to hear from you your experience when it comes to not just your own personal brand, but the brands of your companies. And then what shifts you made to start to get more of that recognition, because these aren't just vanity metrics when it comes to getting features and everything like that. Those are core and fundamental to the business, especially when you're trying to raise. So, can you tell us a little bit about that?
Yeah, I mean, I think the first thing is my first company, was much smaller, and I was, it was a single founder for a big part of it until my CTO came on and became a co-founder towards the end of the business. But I think one, like the quality of the team that you have is a direct representation of the quality of the leader that you are. And when we hire an executive in the company, how we kind of test their caliber is who can you bring with you and who can you
Mm,
recruit and hire. And so when I think about how do I personally build a great reputation, it's when people interact with my team and that reflects to how they view my co-founder and I, and how they view me, the kind of culture we've been able to create, and that is a reflection of either our vision or our values or our this, that, the other. So that my strategy with Sense and hopefully in my life in general is like build the best base around and it's not the Alex show or the Gilly show, my co-founder or anybody else show. It's like, this is the Sense team. Every time we do a press release, every email, it's me and my co-founder, or it's pictures of our team and our customers, right? We've put out, marketing campaigns. It's like the best laundromats run on Sense, right? Not every laundromat in the country, not 50,000 of them or whatever the numbers. It's the best ones because we want to be seen as like the best people are here. The best product is here. The best customers are here. The best team are here. And that is like a very organic way for, I think, reputationally, if that's even a word, for that to elevate kind of how I'm seen or how my other leaders are seen. So I think one is building badass teams is paramount. For me, I don't necessarily know, and it's hard for me to resonate with people that are one way as a leader in their company and another way who they are with their friends and their family, et cetera. I don't know how to do that. And I don't say that in an arrogant way. And I'm super motivated when I see like some awe-inspiring leader, but then I'm like, oh crap, this is a completely different person than I thought they were when I spend time with them personally. And so I
oh,
think my strategy has been kind of, I'd say like kind of radical transparency or radical honesty, or more just like relatability, or just like, this is who I am. And I want everybody to know the things I'm good at and the things I'm not good at, because I want people to know where I'm indexing on trying to improve. And I think hopefully from a reputation standpoint, what people see is a lot of growth, because I'm very honest to the areas that I'm not good at. And so they can see, wow, I know Alex wasn't good at this. I'm looking at his performance and ability to excel and grow. That's what I want out of a leader, because that's what I want to be able to do myself. So building great teams and being kind of radically honest and authentic as a leader, and not trying to present a certain kind of personality that we think will be inspiring,
mm.
are the two things for me that I've tried to index on as, our company gets bigger, our customer base gets bigger, and our impact as a business gets bigger.
I really like that team focus too. That's really important. It shows the ethos and the culture that you're trying to cultivate. And then even with the way that you're marketing, the best laundromats run on Sense too. It's like, hey, listen, we are nothing without the laundromats that we serve. And I think just hammering home that message with consistency and then bolstering that with the reputation that you've built, that's crucial, vitally important.
Yeah, and like growing up, I would get feedback that I'm arrogant or cocky or confident, whatever it be. And like that was something that when I was a kid, and I so have been afraid of that following me in my life, that I probably index on the reverse, where I don't want to talk about myself or do anything like that, because I don't. And it's the positive. There are a lot of positive byproducts of that. But I think there are things that I can lean into probably more that are, that I could be more confident in myself and you know, how I speak in general. But I think that's something that big personalities, I wouldn't be surprised if a lot of big personalities have been called, I'd say I got a Jewish mom who ensures that I don't get a big head or anything like that over time. So I have enough accountability from that standpoint. But I think that it's not uncommon feedback for big personalities and loud mouths like myself to be seen that way. So I think part of the dynamic that I struggle with and continue to work on, and I encourage a lot of other people in similar personalities as me, is like lean everything into the team and everything, because you're my just base level confidence and maybe in some level arrogance is enough. I don't need to lean more into any of my own accomplishments or success. Let's make it all about the team and the others, and that's a more fun experience anyway.
Brilliant. Brilliant. And so, Alex, what we'll do right now is we will do a lightning round. So, a couple of quick questions. And so, the first question is this: what is the biggest mistake people can make when they are negotiating multi-million-dollar deals?
Well, lying, or trying to cover something, or maybe not lying, but trying to delay somebody finding out something. Trying to hide, like it will all come out always. If you can own what is the ugliest and get people to love the ugly, then the pretty is the most amazing part of the business anyway. So I think that's a key thing that I've had to work on early days, and we see it all the time. People trying to hide the truth or hide the thing that they're worried people finding out. And if you lean into that and own it and make it part of the story, it's a powerful one to get deals done.
I agree 100%. Goes back to what you were talking about with reputation too, because that travels. If people will discover it at some point, and then now people are on guard. Now your truth is less potent because they don't believe it. There's an additional layer of skepticism that they have to break through, which is tough.
100%.
So yeah, I mean it is, even for the people who are listening, even if you are evil, it is not strategically sound to lie.
It is.
It just
And like hiding a number or putting in something or trying to talk over it, like the I think the best thing for anybody is leaning into the things they are personally the weakest at, or part of their business they want to improve the most or are worried about. Because if you can own that, then you can actually build a strategy around it and then a story around it. And you can actually make the thing that is the least exciting the biggest opportunity to be able to grow or improve. And that's what a buyer can say: oh, you're not doing this well. This number sucks. Yeah, but I've been thinking about that for so long. Here's my ideas on how we can really improve that or make it better, or we should shut this thing down and actually overinvest more over here, whatever it might be. The good, bad, the ugly, it's all part of the story no matter what.
awesome. Ooh, that's good. Okay, good. So, and again, you'll see I'm hammering multi-million,
Yeah.
blah blah
It's
blah,
good
just
that, yeah,
for the salacious nature of
I'm in.
social.
I'm in.
Um, so when it comes to you and all of the deal making, you've been able to negotiate almost $250 million worth of deal that we are aware of. What is the number one skill that you have relied on the most in the pressure packed moments?
Well, I'd say like, I'll give you one joking one, but also somewhat serious is, being able to, I guess, kind of that, what I don't forget the exact term. Maybe it's like elevator talk, right? How can you handle the moments of just like making funny jokes along the way while we're just kind of waiting to get into the meat? But I think really it's like, can you be enjoyable to be around? Can you build connections with people on a huge variance of personality types? I think that is the skill that is, you're not a chameleon, but you're dynamic. You have to be able to have a broad range of interests. There's only so much business you can talk about. And I would go to 4 dinners with a group before we'd even talk about our business, and they'd go for hours talking about relationships and family and interests and everything in between. So I think having a broad range of interests and being able to hold conversations for a long time and handle your alcohol in that process. But I think like being socially dynamic is a critical skill in and high volume deals and investor conversations, and you have to enjoy it. It has to be real. You can't walk out and say that was the worst effing day of my life. Like you have to find a way to enjoy it even when you don't. So I'd say like that. That's a skill that I would index on the most, and that all goes back to radical honesty, transparency, and relatability at every level.
Thank you. Thank you for that answer. Because I think, again, we over index on negotiation skills and strategies. Not to say that that's not important. I teach this. Okay. So it's not that it's not important. It is important. But I think we just undervalue the value of connection, of just being likable. And the thing is, to your point, it has to be authentic. And the only way it can be authentic is if you are intentionally putting yourselves in different environments with different people and exploring different hobbies in low stakes scenarios. Because if this is your first time and now you're going to pretend like you like golf, like that's not, you're setting yourself up for failure. It's just not good. And so it's so interesting when you are well read, well traveled, you are curious and learn about different people in different industries. You push yourself to have conversations with people that you wouldn't usually talk to. Now you have introduced a new level of dynamism in your ability to connect with other people. And so it is a beautiful thing to find different versions of your authentic self in front of vastly different
Yeah,
people.
I mean, simply put, like friends want friends to make money. I say this to our customers. I say this to investors. Like, I want my friends to be successful. I definitely don't want my enemies to be that successful. And if I don't really care about you and it's neutral, like I don't sure, like be successful. I don't really care. So like you want to build authentic relations because you want people to care about you, because if they care about you, they'll care about your success. And if they're a part of that, that's also a meaningful thing. So yeah, I couldn't agree more.
Great. Oh, this is good. You're knocking these out of the park,
Uh,
man. It's almost like you've negotiated before or something. It's weird.
uh,
This is good. I think ooh, those were pretty solid. Well, let's get Simone in here. So, Simone, I know you've been listening. What question is coming to mind for you?
Yes. Uh, I love when we bring practitioners to the show because the type of advice is simpler and easy to apply. So one of the things that I would like to know about a practitioner, because I was looking at your profile, and right after university you started your own business. So what is the lesson you have learned the hard way that you remember that you can share with us in that with that simple way of communicating that you have?
Yeah, I mean, I communicate simply because I am quite simple. I don't. So just to put that out there, and everything I say is just my perspective. I don't have the blueprint to all of it. I think the constant in every, whether dropping out of college, starting my first business, all the trials, tribulations relating to that, selling that business, starting Sense, there's been one constant, which is the entire experience is remarkably painful, emotionally torturous, in many cases lonely, difficult to resonate and share, and help have other people share that burden with you. And Jensen Huang from NVIDIA spoke to Stanford Business School graduates, and they asked him, "What is some of your advice for students graduating?" And I'm paraphrasing most likely poorly, but he basically talked about how adversity is critical in anybody's ability to succeed and persevere. And basically, he wished them, I think I can quote, saying, I wish you immense suffering and pain. Because that's the way that you endure. And so people looking to find the easy way rarely last. And I think it's going to be very interesting in a world of AI of who can actually endure challenging environments when it's not so hard to build software. Who can actually endure when it's never been easier to do the thing. And I think over the last 10 or 20 years, ease has sometimes been the biggest reason that companies don't succeed, because they try to take the easy way. And then when they get confronted with pain and adversity and challenge, it is a new phenomenon and a new feeling. And they don't really know how to push past that. And so the best advice I can give is to fail as much as possible and to endure as much pain as possible and find healthy coping mechanisms when you do that, because they're very unhealthy ones, but have healthy coping mechanisms and look to and figure out how to challenge that into your own success, because the only way that it's worked out for us. It's not like a single thing that made it happen.
Yes, pain tolerance, it is the hidden key to success. And I think it is underappreciated because it's not something that we want to be true. We prefer it to be the brilliance of the idea. Everybody's like, got an idea. Ideas are cheap.
Yeah, no, I think we're generally all like psychos and morons, to a certain extent to do this kind of work. It's an immense amount of pressure with no payoff that has any sense of guarantee. Your odds of succeeding in something like this are lower than your odds of succeeding almost anywhere else. And it's a thankless job in many ways. There's no like, you're not getting a pat on the back that you're doing a great job because you don't know a lot of the time. And so it's not something that I think a really smart person would look on paper at just, should I do this? A lot of people will say, no, I shouldn't do this because it doesn't statistically make that much sense to do. So you gotta love pain and to a certain extent. And the people that don't get a real rude awakening, because I didn't when I started. And then over time, you're like, oh, you know what? This feeling of like constant anxiety and panic, doesn't actually feel too bad at this point. Now I'm okay with it. Now it's kind of like a Tuesday. And so we can move. It doesn't have to feel innate, but you got to build it up and build the calluses.
100%. I remember a couple of years ago, I was business is tough. I don't need to tell you that. It's hard. And I remember just as I started as I started to make more money, have more success, get a bigger team, I started to feel worse. And I was like, what is happening here? And so I was always thinking, I was externalizing the problem. I was like, oh, this is because of this. Once I fix this, then it'll be fine. Oh, it's because of this. Once I fix that, I'll be fine. And then I realized I am constantly feeling like this no matter what. And so I had to have a really tough internal negotiation. I said to myself, okay, Kwame, here's the thing. What you're feeling is not an anomaly. This is what it feels like to be on this path. It's not necessarily that something is wrong. It's that what you're trying to do is difficult. So here's the question. Are you cut out for this? Is this something that you can do? Because if not, we've reached a certain level and now you're feeling bad all the time. So is this something you could do? And I had to say, I can't allow that to be the answer. So you have to find a deeper level of strength and resilience. And again, you can't just buy that. You have to cultivate it within yourself.
And I would say, and if the answer is, you know what, I'm not cut out for this, as I meet a lot of people that do say that, then you bring on an amazing partner that is, and you find a position in the business or somewhere that you can be more successful in. I see a lot of CEOs that become chairman or become COO or become president or become non-operating roles because they've taken the business as far as they can take it. There's no indictment on somebody's inability to scale. I met plenty of executives that are great at 0 to 1, just to take you to 1. And then there's a better person that could take it 1 to 100. Right. And you see that a lot, even in finance functions, right? The person that takes you public is generally not the first CFO you have. And there's no shame in that in any way. So I think it's important to be intellectually honest all the time. I say this to our team in general, no matter what position you are. Like, intellectual honesty is critical for your own personal development and growth. If you can't look at yourself and say, I can or I can't do this, or I can't do this, but I want to, so I will sacrifice and endure to then do, I think it's not, you're doing yourself a disservice if you're not being honest. And if you don't like what the answer is when you're honest, then there's a lot of work you could do on yourself in a positive way that can deliver a lot of growth. I'd say one more thing as I remembered that I continue to struggle with today is comparison very much is the thief of joy. And when I look at, we raised 140 million and I go on X or Twitter or whatever, or LinkedIn, and I see other people raise more money, or there are bigger companies doing bigger things, or this, that, the other, like, yeah, I feel that. I shouldn't, because who cares about how much money you raise? But you do feel that a little bit. And so I still do. And so I think there's a competitive nature that's a positive, and there's a real negative to why would you compare or care what other people do when there's enough to focus on directly. So just wanted to add that because I think it's important.
Oh, we can't leave that as a
Yeah.
footnote, Alex. That's big. You can't drop like some
Yeah.
existential gem and then peace out. That's not right. But you're absolutely right, though. It's crucial for us to understand this because it's easy to say, very difficult to implement, and even more difficult now with the ubiquity of social media. We're always confronted with somebody's idealized lifestyle. And one of the things that helped me, two mental shifts that helped me to kind of just break that pattern a little bit, just have a little bit of an interrupt. Because a lot of times, what I personally need is an interrupt. I see something and then I start to envy that thing. And then I just need to break the spell for a moment. I can reorient my focus to what I'm grateful for in the moment. And so, one thing I recognize is that anytime I'm jealous of somebody else, I know that there is somebody jealous of me for some other reason. And I also know that that person that I'm jealous of is jealous of somebody else for a different reason. So we're sitting here all jealous of each other. That doesn't make sense, you know?
100%. No,
That
I couldn't agree more with you. I think, and I think that interrupt concept, I think is genius and super critical. So I'm gonna try to implement that more myself. But it is comforting to know that at every level, billionaire or out of college hustler, everybody struggles with that in some way or another. And so there is some comfort that you do have that it's a disease that everybody has. It's just a question of who quells it the best or can manage it.
exactly. And then the other thing too, I made a deal with myself. I said, okay, you can continue to be jealous or envious of a person under one condition. It has to be a holistic swap. So here's what I mean. So if I see somebody who has a thing or is doing something, and I'm like, okay, I wish I had that in the exact same way. It's like, cool. I want you to evaluate their whole life, trade everything, trade, trade your family, trade your
I really
everything.
hope you have not found somebody that you're jealous of if that's the deal that you've made.
No, no. Whitney listens to the podcast. Don't worry, Whit. I'm staying. I'm good. So and once I realized that, I'm like, that means, because if there's no holistic swap, that means that holistically I still like my life better. So the analogy I gave in my mind, just using NBA terms, everybody knows who Kobe Bryant is. Fewer people know who Ben Simmons is. So Kobe Bryant, he was not, and he said it himself. He wasn't very physically imposing compared to the other athletes. He wasn't like a natural athlete. He had to work really hard. Ben Simmons was, 6'9", physically more imposing, but we saw how his career fizzled out. And so for us, it's looking at somebody else and wanting what they have. It's essentially like Kobe Bryant saying, "Man, I wish I had Ben
Right.
Simmons' body."
Yeah.
Like, no, we would not make
Yeah.
that trade
Right.
holistically.
100%. Really hope Ben Simmons doesn't listen to this podcast, uh, but I
I
agree. I mean,
would.
I obviously agree. It is a perfect analogy to that. But no, and that's look. It's the right strategy. I think there are some things that are never. Maybe I have a pessimistic view. I don't think I'll ever stop feeling that way to a certain extent. I think that's just the natural competitive spirit. And so I think that people think they want to cut out these parts of personalities that are so many parts of a personality have two sides of them. The competitive edge can be
Yes.
super negative because you're doing that comparison and it steals your joy. But that competitive edge also makes you wake up a little bit earlier, push a little bit harder because you want to be the best. And so it's not about any negative you have. I think there's probably every negative in my personality has its reciprocal positive in some way.
Yes.
And so it's about how do you put more of the positive out there, manage more of the negative. But your character is your character is your character is your character. It's never going to really change. I think your behaviors can change, your character can't. And I think it's once you realize that, then it's about how do you manage from there.
I love it, man. Oh, this is great. And now you see, listeners, why I had Alex. I had to have him on the podcast. And let's just give him a quick synopsis before you bounce about how we met. Because it was Austin, Texas last year at the Cody
That's
Sanchez
right.
event. So how did you meet Cody, by the way?
I met Cody because she was, I think, an investor or an investor of ours was an investor in their fund, and we were raising, I think, our Series B, and talking to that investor, and they said, "Oh, we know Cody," and I've known about Cody for a long time, and and her husband Chris, just from the social media of laundromats, and I've always wanted to connect with her. And then we were connected through this mutual investor. She actually invested in our Series B round, and got to build a great friendship with her team, with her, with Chris, with everybody there. And when there's an opportunity to that she offered to speak at the Main Street over Wall Street and just continue to kind of support the things that they're doing, I would jump out a window for any ask that they had. And so it's just been amazing working. Everybody on their team has been amazing. So yeah, just a connection through a connection, and it's been great ever since.
Incredible. Yeah, it was a blast. Cody does a great job of connecting like-minded people who are just generous and willing to share. And it was cool being part of the community. And as soon as just knowing that as a filtration process, if Cody says you're good, cool, then you're cool. And then we vibed, we had a blast. But if I recall correctly, I feel like because we spoke on the same day, but the wasn't there some big name person who spoke right before you?
Yeah, billionaire investor, co-founder of Palantir, and Joe Lonsdale spoke before, and I thought that was going to be pretty bad. Then I heard you speak, and I was like, well, at least I didn't go. At least he didn't go before me, because that would have been even worse for me. So I think it was actually okay. We had enough differentiated, but you did so great in your talk. I was just glad I didn't have to follow that. So
Oh, thanks, man.
that made my life better.
Thank you. No, that was great. Dude, I appreciate you. This was so much fun. Thank you for coming on the show. Thank you for sharing those stories. They were a blast. And before you go, just let the listeners know where they can connect and learn more about what you do.
Yeah, you find me on LinkedIn. My name's Alex Jekowsky, and that's a great way to connect from there. If you're a prospective laundromat owner, interested in laundromat owner, go to tricents.com, CENTS. And we'd love to show you our product, tell you about this amazing industry and the ways that you can get involved. But I'm open. I love connecting with new folks, whether entrepreneur or anything in between. So we'd love to connect.
Appreciate you, man. This was awesome.
Awesome. Kwame, thanks so much.